Now let's continue with next segment, a preview for Yellen's testimony. The chair of the Federal Reserve, Janet Yellen, will testify on Valentine's Day. It's Tuesday at 3 GMT. So why is this important? It's more important than the rate decision because, first of all, we didn't get anything, and the rate decision on February 1st was the rate decision without a press conference from Yellen, without new forecasts, okay? It's the first appearance before the new administration, the new composition of Congress. Sure, many people there are people who know her and she knows them, but some are new and it's under the new president, of course. And since her last testimony back in December 2016, or press conference around the same time, December 2016, there is lots of data to digest, okay? So that happens Tuesday at 3 GMT. What will she say? Well, central banks try not to say anything, central bankers, and Yellen is no different, okay? She will probably cement a no hike in March. She will be dovish enough to signal what we probably already know, that the Federal Reserve will not raise rates in March. And the next meeting, which is also a big meeting with the press conference and new forecasts. She will use the phrase data dependent, of course. The Fed reacts to the data as we go forward. Going forward, another key phrase. And she will be asked on fiscal policy. And she'll probably dodge these questions because that's in the realm of politics, of not her field, okay? But basically, she'll give us the basics that if we have more stimulus from the government, from the Trump administration, that means more tightening. She'll probably make this link, okay? More rate hikes if government spends more and pushes inflation higher. Less means less, of course. We will also see questions. I will be looking for how does the Fed see wage development? Wages, salaries, money in people's pockets, that's what makes the difference. Key difference between inflation that is due to energy prices or things like that, temporary, or that people really have more money and they push all prices higher. She'll be asked also on impact of trade changes, dodging these questions, and impact of deregulation, probably also dodging these political questions. But these are things that she'll be asked about. These are political things, and of course they impact the Fed, and maybe more in the long term. But Yellen and her colleagues will try to avoid politics, doing their best. Big question, how will the dollar move? It depends on how confident about the economy is Yellen, or maybe she's still not sure about the hikes, okay? Dovish or hawkish, okay? Basically, if she's more confident about the economy, there are higher chances of a rate hike. We've seen her express confidence about rate hikes, about the economy. But since then, we had more data, such as the NFP with the wages. So markets are now pricing in one hike in June and another in December. And even three, according if you listen to the Fed, if you listen to the dot plot. So that means June, September, and December. But markets are more skeptical. If she is more confident, there are higher chances of a hike in June and then one in December, even another one in September. But if she shows lower confidence, worries about wages, things like that, a dovish Fed, that means 2 hikes or even less, means some doubts about June as well. June is still far, of course, but markets are looking at that as well. What should we look out for in terms of timing, market movements? Remember, the Fed publishes the statement just as Yellen sits down, more or less, at 3 GMT. She might be still waiting. Congress might still be waiting. They might have some kind of a delay, but the statement goes out at 3 GMT. Then, probably a few minutes after 3 GMT, she actually reads the statement. I would expect the first move to come when the statement is released and not while she talks. But after she finishes talking, reading out her prepared statement, she begins the questions and answers session, okay? It could last up to 6 hours and could be very boring. The first minutes or first half an hour is more important because that's when headlines could come out. Now, also on Wednesday, also on February 15th, there is another Q&A session at the beginning, she'll repeat the statement and then get asked more questions and maybe provide more headlines. But as always, the fresher data is more important. Tuesday is the big day. Tuesday, 3 GMT is the most important time. Okay, so that's a preview of Janet Yellen's speech, testimony, which is, I think, a very important event for markets, for the US dollar, because, well, of course, the politics lead and the Fed lags, but the reaction of the Fed to politics is key. Here is Donald and the dollar.